Hello guys. So today's session we're going to deal more with the theory. It's going to be more of theoretical. Okay. Um Basically we'll be discussing pattern. We'll be discussing pattern and look at the methodology behind what we see on our chart. Alright. So basically we'll be talking about the M, okay, and the W pattern. The M and the W pattern. Now, what brings about this formation is similar to your normal double top and double bottom pattern, such that the market is in an uptrend, all right, got to a level and pull back, okay, come back to this same level again, and then we see a reversal to the downside, okay. Now, this is our double top, this being the very first top, and this is the second top. Okay, the opposite of this is the double bottom, whereby the market is in a downtrend, got to a level, reverse, come back to the same level, and then push up. Okay, this level is our first bottom, and then the second bottom. So this actually looks like M and W. This looks like M, and this looks like a W. Okay, so let me put the name double top, double bottom. Okay, so there's another pattern we will talk about again, which is the triple top, so that the market move up, do a reversal, move up again, reverse, then the third time before we see the push to the downside. So this being our very first top, second top, and then the third top. Okay, so again we have the triple bottom, something similar to this. Then you have the first bottom, second bottom, and the third bottom. Okay, triple top and triple bottom. All right. The methodology behind these patterns is that we see a whole lot of bullish pressure to the upside, all right, and it got to a particular level whereby the buyers could not push the market again. Remember, I always tell us that we are looking for the dominance. I want to follow the direction of whoever is dominating, either the buyers, okay, look for the dominance in the market, either one, the buyers, or the sellers. Okay, so you look for the dominance in the market, either the buyers or the sellers, because you want to follow the direction. When the buyers are dominating, the market is moving up. Okay, when the sellers are dominating, the market is coming down. So when buyers are dominating, you only want to buy, you want to place your buy. Okay, and when sellers are dominating, you only want to sell. You only want to sell. Now, what you notice is that at this particular level, the first stop, we see a sign of the bears coming in, okay, but they are not able to push the market that much. Let's call this place let me say 50% retracement. 50% retracement meaning like halfway. If this total length is 100%, okay, from here to here is 100%, the sellers are only able to push 50%, okay, and the buyers push the market back to this same spot. And what you remember is that the market always repeats itself. So you are expecting what happened at this level the first time to happen again the second time, okay. The only thing you need to see here is to see the selling pressure. So I will also talk about candlestick pattern that shows either the buying pressure or the selling pressure are coming in the market. All right, so all you want to see here at the second touch to confirm that the market will repeat itself is that you want to see a lot of selling pressure coming in. So when you see that as your confirmation, it then means that this level holds and you can place yourself. All right, I'm just talking about the theory now. Double bottom, the methodology is just that the market has been in a downtrend, coming down, coming down. It got to this first level and there is a push up, okay. In this example now, let's say this downtrend is 100%. When you look at this retracement, it looks more like 30%, okay. I'm just trying to show you so that you can see the type of pullback. So 30% of this total movement, the buyers are able to push the market, all right, but they could not push that much. The market come back to this second level. What will come to your mind is that the market always repeats itself, such that we expect this push to happen again the second time, okay. And it will not just happen, you wait for your candlestick confirmation that shows your buying pressure coming in, all right. So the buying pressure is what will push the market to the upside, all right. So the same methodology for triple bottom, the market will always repeat itself. The market will always repeat itself. The market will always repeat itself. The market will repeat itself. All right. So these are basic pattern that I would like to explain to us. Okay. Now I will do a little modification to this. Okay. Let me take this out. Let me take this out. Now let's start again. The market in an uptrend, right? The market moving up. It then get to a level, all right, where we see a pushback. The market coming back to this level. Now, when you see the market on this level, it doesn't mean that the market will come down, certainly, all right. You wait for your candlestick confirmation. One of it is seeing bearish pressure, whereby you just see a very long tail, all right, with small red body. When it is red, it gives more confirmation. When it is green, almost the same thing, but red color gives you more assurance that the market is about to reverse, all right, because it's actually satisfy the condition of bearish pressure in the market, okay. Now another thing I want to see at this level is that I want to see the market now give me a lower low, all right. I want to see that after the market got to this second point, at least this is double top, all right, the next one we have could not get to this particular point. So immediately I see that you have confirmed that okay, the market is about to revert to the downside here, and what will confirm your downtrend to you is that you continue to see a lower low, all right. The market continue to move in lower lows, lower lows, lower lows. So what I'll be expecting here is to see a lower low. So it then confirms to me that the market is about to move to the downside. So that's one sign of confirmation, okay. So let's talk about double bottom. So the market in a downtrend, This is a downtrend. Before we see this pullback, the market coming back to this level again. Identify this your key, first point, second point, whereby you're expecting a reversal. So you then wait for the market to do a little pullback, show you the buying pressure, give you a higher low. All right. So this is the point whereby it got to this level, market repeating itself again, and you can see higher lows. All right. Then confirm to you that the market is about to move up. Okay. So I hope you can master this pattern very well. The reason why this is coming up is that, let me take this out. The reason why this is coming up is that, in an uptrend, the market must continue to give us higher highs, higher highs. You get? So at a point whereby the market could not give us higher high again, all right, this is a signal to us that the market is about to reverse. You then wait for a lower low. Okay. Okay. You then wait for a lower low. If it is on key level, more confirmation, whereby the previous support is now turning to be the resistance. All right. So this is where you start placing yourself, because actually it has failed to give us higher high here. The market is no longer getting higher. All right. And we see a lower low at this particular point. It has confirmed your downtrend to you. Until you see your lower low, you don't conclude it's a downtrend. Until you see your lower low, you don't conclude it's a downtrend, because another possibility that might happen is that the market continues to give us higher high. All right. It got to a level whereby the market will not give us higher high again. Okay. And you started selling from here, forgetting that this is a key level that can push the market up. All right. And then you see a retest and the market will just continue to move up like that. Okay, that's why we need to confirm with the market showing us some level of lower low. Some level of lower low will confirm to us that, oh, since we are not getting higher high, first it cannot break through this high. Now we can see a lower high. Then downtrend has been activated. You can take a safe trade. Until you see a lower low, your uptrend is still active. Don't forget. Until you see a higher high, your downtrend is still active. In a downtrend, okay, so let's say the market cannot go lower. You can see where the W pattern is coming from and the double top or double bottom. All right. Until the market give us higher low, all right, you don't conclude the market is in an uptrend. So I want to make this video short. I will go to my chart now to show you some examples. So let me show you some of the trades I took. Let me try and change this one, please. Okay. I hope this is better. So I will start from the very first trade. I'll start from the very first trade. Now, Now what you see that, okay, let's say the market started off from here. So the market started from here, okay, continue to give us higher highs, higher low, higher high. At this point, okay, you note this to be your, you know this point to be your low, all right, whereby you are expecting the market to bounce off, okay, to give us our higher high here. So each time we continue to see our higher low, higher high, higher low. But at this point, because you'll be wondering why I placed buy, all right, I placed a buy on this trade. This 20 for making sense. Okay, all right. So the market started from here. At least we have been getting lower high, lower high. So this is a downtrend, right? And from this point, we have higher highs. Correct? This is what I'm explaining. The market has been giving us lower low, all right? Lower low. This is our lower high. Okay? And at this point, we can see higher high. Although this has not confirmed uptrend to us until we see this higher low. All right? So this is where our uptrend started from. You then need to see some candlestick confirmation here and then place your buy. Okay, you know the next thing we'll be waiting for is for the market to come back to this place. All right, you'll be waiting for the market to come back to this place and place your buy, because this is really your first touch, second touch, and the third point. So theory will tell you to place your buy from here. All right, and here is what I want to teach you today. Here is what I want you to learn today, because most times you'll be waiting for the market to come back to your trend line and it will not come back. It will not come back. This is your first touch, second touch, abi you are expecting the market to come the third time, but most times, okay, not all the time you see the market come back to this third, to this trend line to come and give you the third touch, but you can see double bottom here, all right, whereby the market give us our higher high, come back to touch it, do a push up to give us higher again, come back to touch it again. Now when you see this first point, second point in an uptrend, what this portrays to you is that the market is still in an uptrend. Uptrend is still valid. Okay, what will make this to be invalid is when we start seeing some level of lower low. Let me draw this outside. Uptrend, pull back, all right, higher high, higher low, all right. As at this point, what will make all this uptrend to be invalid is when we see a breakout, all right, the test. So when we see this lower low, that is what disqualify, all right, and this higher high, lower high, this is what disqualify our uptrend. Until we see this, let me tell you, there is no downtrend though. Okay, so you see that the market give us kind of W pattern in an uptrend, which tell us that uptrend is still valid. Okay, it then make this high. Now I'll tell you why I place my buy here. I'll tell you why I place my buy here. So I've already shown to us that we are in an uptrend, but look at this key level whereby the market fails to give us higher high. The market fails to give us higher high, all right, and it also fails to give us lower high. So my drawing is not straight. It fails to give us higher high, and it fails to give us lower high, lower low rather, which means uptrend is still valid. You don't conclude it's a downtrend until you see a lower low. Okay, so we see some kind of correction here, some people call it consolidation, and then boom, the market move up again. And that is the reason why I place my buy at this point. That's why I place my buy at this point, because I know the market is in an uptrend. All right, it is very safe for me to place my buy at each of these bottom. It's safe to place the buy at each bottom of this level. Okay, now and again, don't get stuck to the conventional, the theory way I used to do uptrend for you, like the market continues to give us higher high. Your uptrend can be a push up, a kind of correction, all right, push up, correction, push up, correction. This is also a valid uptrend, all right, because it's not all the time you see the market come back to give you lower high and you keep waiting for this and you will not see it, and you will have missed a lot of opportunities. All right, so this is just an example of what I just do now. Uptrend, correction, all right, uptrend, you get. So this is the same thing that happened here. Uptrend, correction, uptrend. Okay, I hope you get my point there. Now let's go to the second example. This is USJPY. Okay, Euro JPY. All right. Now on this trade, this is my entry. I don't know if you can see this dot. This is my entry on this trade, but I didn't close when it got to my target. Oh, I think I have my target here, but I think this should supposed to be my TP1. This level is supposed to be my TP1. Now, what did I notice? The market in a downtrend, right? Downtrend. But at this point, it fails to give us it fails to give us a lower low. Bounce off, get to this level again, come back, fails to give us lower low. All right. You don't conclude the uptrend is intact now. You don't conclude it's a downtrend because this is a ranging market. All right. The market coming back to this level. All I need to do is just to place my buy. Whereas my take profit is supposed to be here because this is the level whereby the market has been coming down. Okay. You sell the high, you buy the low, buy the low, you buy the low. Okay, so I'm supposed to take my take profit here, but actually I was expecting a breakout, retest, and then boom. Okay, so TP1, TP2, something like that. Now the market pull back down again. This is another buy entry, all right, to this point. Okay, now I will not conclude that it's going up or down because the market is still ranging. The market is still ranging, so it's like a downtrend, correction, and there are two possibilities: either to go up, retrace, back, up, or break down, retrace, boom. Okay, so you wait for the direction the market will go, but in the meantime, you can be taking advantage of the range. Okay, now let's looking at this. This is a downtrend, right? This is a downtrend. This is my entry here. I think this is my entry. I think this is my entry. So the market in a downtrend, push up, down. All right. This is the key level whereby the market is about to reverse. Okay, I don't actually know, I just place this to it. Now this is the best time I could have placed it around this place. When I see that the market cannot go lower, the market cannot give us a lower low. Okay, the market cannot give us a lower low, the market can move up. All right, or there will be a breakout with it down. All right, so I think the entry for this trade is on 15 minutes, I guess. It's on 15 minutes. I don't really do much analysis on this, or maybe I use correlation, something like that. I can't really remember. Let's go to the, okay, give me this JP1. Okay, now you see the market coming from a downtrend, lower low and lower high. All right, this is my entry here. I hope you can see the dots. Okay, lower low, lower high. Now you see the market cannot break this level. The market could not break this level. Okay, at least this is the lower low. This is the last lower low we have. All right, and the market cannot break this lower low point. Okay, now we see higher high. Okay, higher than this. You see higher high. Okay, and the market giving us higher low as confirmed uptrend, because you can actually intercept it like this. Okay, so what you just need to do is for you to be able to identify potential reversal area. Okay, the first thing is that the market will not give us a lower low. All right, and we'll see the market push up down to give us our higher low. Then you pick your uptrend, you pick your buy from here. All right, okay, this one is a loss. Let's see. Let's see, what did I get wrong here? I place a buy at this point. Place a buy at this point. Okay, so I don't know why I didn't hit my target anyway. I place a buy here, and the reason is because, okay, this is our last high that we have. Breakout, retest to give us our higher high. Okay, now the market is already in a downturn because we already have this higher high. The market has not broken. Okay, now we have this. At this point, you don't conclude the market is in a downtrend because it has not broken our last lower low here, higher low rather. It has not broken this point. So uptrend is not, downtrend is not active here until we see this pullback to give us our lower high. All right, broke this trend to give us lower low. Downtrend is not active. Okay, now what I'll be looking out to this week. What I'll be looking at this week. Now I already have um a selling bias. Okay, so I'll just mark this one, wait for any market reaction here, and probably the market will come down. Okay, so this looking like more like the M pattern, looking more like the M pattern, or sorry, the double top. Okay, so first know the downtrend, know the trend. This is our high, lower low, lower low. All right, so wait for the market to see any reaction here, and pick your trade. So I don't know why it didn't hit my target here. I don't know. EOGPD. EOGPD. Okay. Market in an uptrend, higher high, lower high, higher high, lower high. Get market in an uptrend. Okay. And at this point, the market is not getting any higher again. Okay. This is the last low we have. This is my entry here. I hope you can see the dots where I place myself. You can see the dots. So the market comes back to give us lower low. This is the last low that we have. Market coming down to give us lower low. Okay. And still respected this key level that we have here. All right. Then say pullback to give us lower high. To give us lower high. These are just the key thing I'm looking for. To give us lower high. All right. Downtrend activated. Place yourself. Okay. This is another lower high here. Now, I want you to master this candlestick pattern. Normally, the only thing I just need to see is that by the time you put this on a line chart, you see that the bulls are getting weak, especially with this candle. This is a doji here. Doji is a sign of indecision, followed by another doji. All right, the buyers are already weak, and then look at the selling pressure that comes in, at least to this key level. I hope you can see how key levels are pushing back the market, and that's because we have a whole lot of activities here. Look at this buying pressure here the first time. Look at buying pressure that comes in the second time. Okay, so you master how you identify the dominance. Master how you identify the dominance. Very, very important. Let me just show you the very last one. So let's talk about this. Okay, let me talk about HFJPY. Let's see. Oh, yeah. I hope you can also learn from this. There's not that without any loss. Okay, I hope you can learn from this as well. Now, this was the point I identified to be the low. All right, this is my entry here. This is my entry here. So whereby the market push up to give us the high, and we see a whole lot of correction here. Okay, I need to identify this low. I only need to identify this peak, this low rather. 1, 2, 3, 4. So I was expecting the market to push up at least up to this point. All right, and the market started coming down again. So that's why I said until you start seeing higher high, you don't conclude it's an uptrend yet. Don't forget, once you start seeing this higher high, you don't conclude it's an uptrend, because anything can happen. It can break. Because you have a whole lot of correction doesn't mean it's going to reverse. All right, it can continue the trend. So watch. That's why I said we can all learn together. The very last one. The very last one. The very last one. The very last one. Okay. Lower lows. Okay. Okay. Right from here. Right from here. Now, look at this. The market is giving us lower low, lower low, lower low. You know, it's kind of higher high here, right? But see, higher low rather. So it's not giving us any higher high, right? It's not giving us higher high. So we don't conclude the downtrend. But still expected this level, and then boom, we see our higher high. This is where you start having the mind of an uptrend because now we have higher high. Okay, so the market coming down to give us this market here, if you can see the dots, market giving us coming back to give us our lower high, higher high rather, sorry, higher high, because the market is going up. So the market coming back to give us our higher high is your point of buying. This is your point of buying. So it's as simple as you looking at your charts, identify the trend, and then read your levels. Lower high, lower low, lower high, lower low, lower high, lower low, lower high. Market is expecting this level, all right? Because this is the buying pressure. Look at buying pressure here. Look at buying pressure here. The methodology of this candle is that okay, it opened here, the sellers push the market up to this point, okay, and lately we see the buyers push the market up this much again, all right. So this pushing is the buying pressure. This is the buying pressure, all right. Now this is also the buying pressure coming in, although small, but we can see a sign of buying pressure because the seller pushed the market up to this point and then the market reverses, okay. So you see that the market give us higher high, higher than this first level, higher than this level. The market giving us higher high at this point, and then coming back to give us our higher low. Okay. Once again, the other thing you need to see, okay, is to see the how will I put it, the bearish power that's trying to push the market down. Look at it. They are weak. They are getting weaker here. They are getting weaker. Look at how big the bulls push the market. Look how the bears are pushing the market. All right. Look how the bulls took over lost. So you looking for the dominance and looking at the strength of either the buyers or the sellers, you actually help you in spotting, okay, all these levels, all these levels. All right, I hope this helps you and you learn something from this. All right, guys.